Okay, so in terms of your income tax, personal income tax, when you're filling that out, if you're doing it yourself, you're going to be looking for the T2125 form. It is built into the personal tax forms altogether. You don't have separate business taxes to file. You have separate business forms within your personal taxes to add. So if you have a T4 from regular employment, you add that. If you have school tuition, you add that. And then you look in the software for T2125, which is basically self-employment forms. On there, there's one line item for business income. So you just put in your total sales, that's fine. And then you have a variety of costs associated with that. The government forms are very limited. I believe there's about 14 to 16 line items. Some of them are like advertising, meals and entertainment, bad debts, insurance, office supplies, what else is there? Rent, which would be more like office rent. Yeah, exactly. Utilities, so telecommunications and things like that. And that basically and travel and delivery. And then that's basically it, right? There's not that many more than that. So things that are specific to you, like helmets or cables or bike locks, those are your supply. So they would just be 90% of your expenses are likely going to be lumped under supply. Right? If you want to be specific on your own accounting records, your internal records on your Excel file, go ahead and be as specific as you want. Bike gear, specifically. So telephone gear. Safety gear, yeah, for sure. But on the taxes, it's just going to be supply.
Supplies.
Yeah, it's just going to be nothing specific, because they don't have that. So it says supplies on the forms. It might say office. I think they changed supplies actually 2 years ago.
Business expenses and supplies. It's kind of like
yeah, it's office expenses and then stationery. Office expenses is the title they replaced supplies with. Okay. I often just put them under there. Now, when in doubt, there's an other section that you could just start listing off items under other, and that'll be fine too. At the end of the day, your net result is the same. What you collect minus what you've spent is what you pay tax on, but you really can't get that specific, industry specific on these tax forms. In terms of what you can expense, and we'll probably touch on this a little bit later in more detail, but basically you're looking at anything you spend money on for your business as a courier. So that could be the cell phone itself, cell phone cases, cables, mounts, backup batteries. It could be hats, helmets, gloves.
Even the monthly cell phone.
Your monthly cell phone bill, yep, because you need the data usage to run your business. Now, whether you choose to take all of your monthly cell phone bills or a portion of it is a different thing, right? But basically, it's fine to report all of it, and then the accountant you're talking to, or if you're doing it yourself, then you kind of decide at the end of the year what's a more reasonable percentage, if not 100%, right? So you really want to think outside of the box, because obviously every industry has things it can expense that possibly another industry cannot. For example, if you're in the makeup industry, of course you go into the store and you buy makeup. That counts. It's your supply. But if you were a courier and you were like, I bought makeup, it's a supply. No, it's not. No one cares how good you look when you're riding your bicycle, right? So you have to think about what is unique to your industry. And safety clothing and winter gear is something that is pretty unique to you guys, because you are outside versus an office person that never ventures outside ever for any reason, for anything. So you do just want to think, what did you spend your money on? And again, bike parts, servicing if you're paying someone else to do it, the bike itself, storage, but then a lot of it's going to be cell phone based. The bag you have to buy, I think Fedora charges for the bag these days, or any other companies. That's basically it. I mean, you're really not going to have a long list. You're not going to have as long of a list as, say, publishing and printing business would have, because they have a lot more overhead, like rent and things like that. But it's just going to be your general day-to-day supplies. If you're paying for FIDO and your cell phone, things like that, it should be fine, especially if it's a low number. That being said, for things like FIDO, you should be able to just contact them to get the receipts, and like Rogers and Telus, because sometimes you might have a bundle, 2 cell phones, a cell phone internet TV, and so they might want to sample 2 invoices from FIDO for the year. Like, they don't necessarily want all 12. But it's fine to just put on for now. For internet, it would be quite small. You may even decide to include internet in your home office calculation for you specifically. Like in my case, I wouldn't, because my home office is the physical space, but I live on the internet. Like, work is the internet for me. So I would claim more. So for your home office, I'd probably put internet in that home office category, because you need it to check your shifts and to pick shifts and to do whatever else you need to do. In terms of your phone, however, that one's going to be a little bit personal. If you are riding Fedora part-time and you have a regular job and you're doing 15 hours a week, you may only choose, again, a comfortable percentage to you, what your risk tolerance is. 15%, 20%, 50%. Very much so not likely 100% because it's not your full-time job, right? If it was your full-time job and you're literally going 5 days a week, average 8 hours, it would be safe to claim at least 70% at that point, and you could probably push it to that 100%. Now, cell phone bills are getting cheaper in price. The government doesn't see that this line item was necessarily a cell phone bill. They just see an amount. So if your cell phone bill is $500 a year, and your income is $20,000, that's not much of a write-down. So if you put all of it, nobody's going to ask questions, right? But it's you determine that percentage. Could be different each year, and it's definitely going to be different between each person because everyone's situation is a little bit different.
Okay, so I was thinking on like in terms of rationale on a 12-hour day. Say you're working another job for 9 hours and then you're doing Fedora for 3.
Yeah.
So 25% of your days actually used.
Yeah.
That's fair.
That's fair game. Yeah. Or what you could do is you could say, and I've seen this happen, say something like, well, I wouldn't have data otherwise. If I wasn't riding Fedora, I need to be connected. Yeah. How much is data within my talk plan?
It's like one of the only apps that I'm running mobile data on like all the time.
Exactly, right? And so you say, well, I could buy a talk text plan for $30, but I have a data plan and my phone costing me $50. $20 is what the answer is, whatever, right?
At least in Android, you can actually look at your data usage by app, and you can take a screenshot.
Yep.
Maybe you take one once per year, and you're just like, here's an example.
Yep.
Just this 1 month, it used 90% of my data. The other was like whatever.
Yeah, everything else was usually a lot smaller. Yeah.
Switch it off on everything else. Everything else is just runs on the Wi-Fi. Like, it's like my
Yeah.
TTC app, my Courier app. Occasionally I'll switch like the internet on if I need to access an email or check on something.
Yeah.
But otherwise.
Yeah, so you could safely argue the cost or the value of the data portion is your phone expense. Because you're not really on the phone otherwise talking, I don't believe. I'm pretty sure it's just 100% on the app. Unless you have to call like somebody for it to report in something, but that's minimal. So the government has recognized that couriers, and I guess this is a pretty old rule actually because obviously it's been before all of Fedora and Courier and stuff. They said that couriers get a fixed meal allowance a day based on each 8-hour shift. So for meal receipts that you're eating on the job, you probably aren't spending anywhere near the allowance anyway. And that allowance is about $17.50 a day. Okay? You're probably not even spending that kind of money.
Whether you spent it or not.
Yeah, whether you spent it or not, you get it per 8-hour shift.
Yep.
So you add up all your hours for Fedora. Now, if you're doubling up hours, if you're working Fedora and Uber Eats at the same time, those are obviously not two separate hours. There are only so many hours in a day. So just keep that in mind. But you're just looking, you add up all your hours, divide it by 8, and then that number are the number of 8-hour shifts you would have had in total, even if they were broken up. And then you still get that, because often it'll be split shift days for most people anyway.
What line do you claim that on?
That's the meals line. So you'll see on the tax forms that it should say meals and entertainment, 50% deduction, and then there's a long-haul trucker, they get 80%. But you just put it under the regular meals. Now, because it's $17.50, that's actually I still believe that that's the allowable claim, which means you would actually gross it up twice as much just so it could be brought back down to $17.50. So you're not taking half of $17.50, you're taking half of $33, $35. $35. So meals and entertainment is a specific line item case that only half is allowable for tax purposes. Right? So for example, a business person. I go out with a client and we just have a meal and we chat. Right? I pay for that meal, I take that receipt and I expense it. For tax purposes, the government is only going to allow me to expense out of my income half of that meal, which would be the client's half of that meal. Right? And so for riders, there is no other half. So, but the tax software, every tax software or tax professional will automatically cut it in half. That's just the calculation. So you have to double it from the $17.50. So you actually have to put in 8-hour shifts, however many you have, times $35 put that number in, and then the system will break it down 50%. And now you have your true $17.50 per 8-hour shift for the year. Yes?
We're saying 8-hour shift. Is that collective in one day?
No.
hours and 4 hours?
Honestly, I just add up their hours and divide it by 8 and say that's how many shifts they had. Yeah, I've never had the government be that specific. I could imagine they're pretty petty about it, and they may want to do that. But at the end of the day, it's probably not that big of a deal for them. And it's not that big of a risk to make that type of claim on your tax return, I don't think. Yeah.
Just to be sure I got this right, let's say you do like 5 shifts over 8 hours. So that'd be 5 shifts where you could deduct half of 35?
No, because it's per 8 hours total. So per day, right? So you would just add up your days.
And times it by 17 months, essentially.
Yes. Okay. Because I know Fedora, at least I've seen these, they'll tell you your hours for the year or for a time period. Just take that total hours, divide it by 8, multiply that number, because it's 8 hours a day, you're looking for the shift count, multiply that by $35, put it in the tax software. The tax software will cut it in half, because that's what its job is, and now you have your $17.50. Yeah, it's probably the best
keep
way.
in mind that Fedora does not count the time that
you're not.
No. When you have half an hour to start your shift early, it doesn't count. And it may not even count until you get your first order. That's when the clock starts going. But you, as an independent business,
Yes.
were working
Yep.
in the area, logged in, ready to receive it. Now, if it was only half an hour every day,
It's a lot.
it would take a month to add up to 8 hours for $17.50, but that's still your time, your money.
Yeah. Yeah.
And over 12 months, that would be 12 times $17.50. It's $210 that you
Yeah.
don't have to pay taxes on.
Yeah.
Right. So
Right.
just keep that in mind with
Yeah.
Fedora. They don't count the time when you first log in early before your shift, even though you are on the clock, you are working.
Yeah, and probably none of the other ones do either, right? Like if one doesn't, you can pretty much assume no one else is going to, because they're not really competing like that. So if you are not using your home to produce income, there's a bit of a stipulation. The government says you can't really claim a home office space.
You do need maintenance space for the bike.
Yeah.
Exactly. Exactly. That's why I don't necessarily follow that logic. I think that that's not a fair assessment to say. But I would still claim a home office for a courier. Now, in terms of how much of that space you would claim, probably anywhere from 5% to maybe 15 or 20%. Now, keep in mind a couple of things. I've gone to people's homes and done tax work, and they've showed me where they've worked and whatnot. Just because your bike is taking up some space in the corner, and when you do maintenance, you bring it out to the middle of the living room, you push everything aside, and you're doing maintenance on your bike in the middle, so it's comfortable, doesn't mean that you're using 50% of your space for business. At that time you are, but overall, the government is looking for dedicated space that is always exclusively reserved for business. So if you were to say, all right, I use half my space for business, I'm going to say, sure you do. But okay, how many hours a day are you using that space for business? If you're just doing bike maintenance, you're talking like 2 hours, if that, a day, right? And then I would say, how many days a week are you using that space for bike maintenance? So you do 2 hours a day, 4 days a week. How many weeks a year? Probably about 45 weeks a year. If you do all that math to multiply it out from 50%, you're going to end up at about 2 to 3% very fast, because the amount of time you're using that space for is so small relative to the annual. You're using it for personal so much more. So that's why we often just say, find a safe fixed rate, 5% to 15%. It's probably pretty safe. I wouldn't likely go above 15 unless you felt very strongly about it. That's because, it is not also following the rules of income production, but it is something that we could argue anyway. But yeah.
Well, if you do go for a small amount, like 5%, say, like...
That's pretty useless. I mean, honestly, I would use 10.
Stored all the time, so
Yes.
you would claim 7 days a week.
No. So the 50% and the hours a day and days a week and weeks a year, That's what the CRA has, but that's the joke I say when people are trying to claim 50-60% of their home space as work. You just can't do it. But if you're like, yeah, my bike is always here taking up some space, 5% annually, 10% annually, whatever.
So is everything else.
Yeah.
I'm falling over it every single
Yeah,
day.
yeah, exactly.
And
Yeah, no. So then put down.
working on it, then it is out in the middle.
Yeah,
Or on the balcony.
that's right. That's right. So I mean, yeah, you'd be very comfortable with 5%. Everyone would pretty much be very comfortable with that. 5% is really not going to give you a huge tax savings. So you may choose to up that a little bit within your risk tolerance, right? Again, it's not really about the numbers. It's about what you're willing to put down, what you're willing to say that you could argue if ever asked. But I wouldn't suggest going above 15% at the very least, at the very most.
I rent a studio apartment,
Yes.
and in it I got a storage closet. It's about 6 foot by 6 foot.
Yep.
So that's roughly 10% of the total square footage.
Yeah.
That's fair game to write up that 10%.
Absolutely.
Right.
Yeah.
Okay.
Absolutely. Because you can prove it,
Yeah.
right? You can get a floor plan and you can draw out that 10%. And you can say to the government, this is my floor plan, 10%. I've had to do that with employment-related expenses, different clients versus self-employed. But yeah, that's absolutely fine. Yeah, for sure.
Or in some buildings where people have a bike lockup area, then
Yep.
you have to rent that. Or let's
100%.
say you have a storage locker as part of your rental.
Yep.
Then maybe you're storing your bike and the maintenance for that bike. in that
And
locker.
gear and a bunch of other good stuff, yeah. Because those bags are massive. Yeah, because anything that's directly tied to trying to make money. And that's what about thinking outside the box. Exactly, like you're renting a spot for your bike downtown so you don't have to trek it around. You just show up and you have it. That's for business, yeah. So technically the government looks at traveling to and from an office location not as business travel, technically. If you can just say, let's say you're buying tickets or what are they, still using tokens or something now? Oh no, it's all Presto, I guess. So I mean, you have Presto reports. So you can say, I'm going to take 10% of my Presto report, right? If you're always going from your place to a set location to start, the government would probably look at that and say, that is like an office. That's the same travel that an employee needs to do, anybody needs to do, that's irrelevant. That doesn't qualify. But if you're starting from different locations every time, that could be perceived as starting from different work sites, and therefore that travel could qualify.
Would I be able to argue that I'm not really going to an office because depending on the weather, I know for sure some parts of the city are better for working, some parts aren't. So like,
Yep.
for example, if the weather is good, I'm not going to go to, I'm not going to take my bike and start off at Yonge and Dundas.
Yep.
I'm going to start at Roncy because I know that's a lot more pickups for me to do.
Yeah,
I
absolutely.
argue that because
Yes.
I'm not always going to one place, then that I can expense that TTC.
Yes, that would be a fair argument. You call them kind of sites, right?
Right, okay.
Yeah. Yeah, as long as it's not the same consistent, like if it was the storage locker, right? Like if you're storing your bike and you go to storage locker, that travel wouldn't necessarily qualify because that's a fixed location that you're always going to. Sunscreen would be a solid argument because of its protective qualities. Having to smell good so you don't get fired, I mean, that's even people like in the office. You have to, so the government is, what they're trying to do with taxes and certain rules is they're really just trying to make an equal playing field in the sense that a self-employed person is being compared to an employed person, which is why the question of riding the TTC to your bike location is no different than an employee going to the office and it's not an expense of any kind. So personal hygiene and clothing doesn't matter because everyone has to wear clothes and have to have a certain standard when you're going to work anyway.
But what if
So we're
the
always
clothing
comparing
is,
those
like,
two.
specifically designed to keep you cool?
Oh yeah, no. Like specific clothing as a courier, that's fine. It's kind of like
Shorts.
like a personal trainer wearing gym clothes. Like yeah, that's something else. But
Pedals, things
Yeah.
like that.
yeah, those are all completely tied in. But for a professional, if I was self-employed as an accountant and I had to go out and buy shirts, I'm choosing, that's different, right? But if I'm a cyclist and I'm working outside, I need gloves because it's going to get cold.
Wool socks,
Yep.
boots.
I would argue those pretty hard. But professional attire doesn't count. So life insurance, no, because life insurance payouts are non-taxable, so we don't get to expense any kind of premiums. Health insurance, yes. It's not an expense. It's a medical expense. There's a separate medical form within our taxes that you would say this was my premium. And these are my additional costs that I had to pay for out of pocket.
$50 a month for a premium, that's an expense I can.
That's a tax credit you can put on your taxes. It's outside of the business forms, but it still goes on your taxes. Yep. Because you're only wearing it as insurance and as safety, and you wouldn't, why else would you need a GoPro? You're not starting a YouTube channel, like you're just doing your own thing, right? Business expense. You'll have union dues. Yeah. Union dues are a deduction, right, out of your income. So that would be a new expense for you. And then in terms of anything beyond that, I don't think so.
Same forms, right? 21, 25?
Yeah. It's all the same, unless the union gets you into a employment status situation. Then Fedora is responsible for giving you T4 slips, right? But I don't think that'll happen, even with the union, because long-haul truckers like Teamsters, they're unionized, but they're pretty much independent contractors all the time. They could, but those numbers are small. Like, for example, cars, they would definitely fight that. But I mean, a car is $30,000, and your cost of operating a car in a year is like $4,000 to $10,000.
So it's pretty safe to claim 100% of a $5,000 bike?
It's pretty safe to claim 100% of a $5,000 bike that you're going to choose to depreciate. Yes. Yeah. Absolutely. I wouldn't have issue with that. It's the same thing with like camera equipment for photographers. Sure, they're using it personally, or computers. Sure, you're using your computer personally, but it's for business. What's its original intention? If you purchase an asset, whether it happens to be a bicycle or an expensive computer, for example, and it's the value of that purchase is $1,000 or more, okay? The government doesn't want us to expense the whole thing. You make $10,000, you spent $1,000. You pay tax on $9,000. They don't want us to do that because they say, well, that $1,000 item or several $1,000 item has a lifespan beyond 12 months. You're going to receive some value of it in year 2 and 3 and 4, right? So they want you to break it up into each of those years. How we break it up is it's called a depreciable asset. There are forms within our personal tax filing, again, it's just additional pages within the same form, and they're called capital cost allowances, CCAs, right? There's one for, I don't know if there's one for bicycles specifically, I haven't actually checked it, but you can find a fit where bikes go. Let's say it's class, 20 or class 8 or whatever. I know, for example, computers are class 55, class 50, sorry. And like camera equipment is class 8, right? But you can find one for bicycles. There's quite a few, there's a lot of them because corporations use these same depreciable schedules. Anyways, and then you just put your total purchase price. You say, this year I bought a bike, $1,000, so it goes in this CCA class that the government has mandated. The government decides what percentage of depreciation that is, probably likely something about 20%. And now you get to depreciate 20% every year. So if you earn $10,000, you spent $1,000, you're out $1,000. You physically only have $9,000. But for tax purposes, you're going to pay tax on $9,800 because you're only going to get a $200 deduction this year. Because next year you get another $200. The year after that you get another $200, right? So it takes a while to get that to zero. Now, in my opinion, I mean, especially when you're riding bikes, it's not fair to say that the depreciation of a bicycle is equal from one industry to the next that might need bikes, right? Because you're riding it a lot harder. My brother used to do this stuff and he broke, I think, 2 frames in a year kind of thing. Granted, he never bought new frames, so he's just cheapo. But, it happens. In that case, that asset is gone anyway. So first off, the purchase of a new frame, you would just expense likely. But if, let's say you ride your bike, you paid $1,000, so you're ready to depreciate it. Year 1, you depreciate it, right? You do the regular stuff, it worked out great. So now the value of it is $800 in year 2. If that bike breaks in year 2, the asset doesn't exist anymore. That $800 gets written off in its entirety. And so on your year 2 taxes, you have a full $800 expense at that point. Now, if you're buying bikes at $1,000 and you really don't think they're worth that much, you just somehow, you paid a lot for it, you probably don't want to depreciate it anyway, right? Anything $1,000 or less, I probably wouldn't even recommend depreciating because you're not getting that much of a benefit over a few years. You'd rather take the full benefit now. Now, if you spend $3,000 to $5,000 on a bike, we can't, in good conscience, expense away that kind of money. We would have to depreciate it, even if we didn't really want to. If it's stolen, then it's a write-down. Yeah. Unless you have insurance, maybe get some insurance money, then it would be the difference. If you're like, my bike is valued at $5,000, insurance only gave me $2,000, then you would write off 3, right? Because you recouped some of it. Yeah.
How do you represent that write down when you come to filling in the numbers in the tax software? Like, do you write yourself a note that says, my bike was stolen, lost $1,000? Like, where do you
Yeah.
take it from? Like, how
Yeah,
do you,
basically.
Because the government's going to be like, whoa, how come?
Yes and no. I mean, the government, they're all automated, right? Keep in mind that a person is not checking your tax numbers. A machine is checking your tax numbers. If the machine flags you because something, an expense account is higher than that average group of people in that industry, then a person might check that. Even at the end of the day, if you lose your bike or your bike gets stolen, you're probably still profitable anyway. And if you're not profitable, your loss is only going to be very minimal.
So where do you put that loss? So like, let's
That loss stays on your taxes. And if you have other income, such as other employment income or rental property income or another side business income, that loss will lower those amounts, right? So if you have a job and you make $50,000 and then your couriering lost you $1,000, you're going to pay tax on $49,000. It lowers your other income. Now, if you have no other income to lower, that loss gets brought to the next year, and it'll lower your future years. Yeah, it'll be brought, or you can bring it back. You can pick which way should you go.
Where do you represent that loss in what line? Like just total income?
Yeah, your total income would be a negative number.
So if in the future when they audit you for that following year, they say, well, it looks like Fedora says you made $20,000, but it says you only claimed 19, that's when you speak up and say, yes, but my bike was stolen.
Well, no, you would still report 20, right? So on our tax forms, like I said, in the 2125, T2125 forms, there's a place to put your sales. You would put 20,000. You would just put 21,000 worth of costs. And now you're at negative 1,000. Right? So they'll see all that in general layout, and if they want more information, they'll ask for it. Like this, pretty much all they're going to ask for is supporting documentation. Right?
Police report to say, yes, your bike was stolen.
If you have a police report, cool, yeah, you could do that. I mean, because they're not going to take your word for it, right? Again, it all comes down to proof, which is why receipts are important, right? For any claim you make. Again, if you're still profitable, if you make $20,000, you lose a $1,000 bike. Maybe your other costs were $5,000. Now you lose a $1,000 bike, now your costs are $6,000. You're still profitable. You're still giving the government money. They're not going to come and hassle you for stuff because you've already given them money. But if you end up going into a negative, and that negative benefits you in another way, like you have your regular job, they're going to wonder, was that negative faked to try and get benefit somewhere else? Was this a hobby business that you aren't really trying to make money on? Like I have a client, they're still trying to do like sauces, let's say, right? They're trying to make sauces and sell them retail. But the first year, it's all trial and error, buying a bunch of stuff, making it, and then deciding what the recipe is going to be, the formula or whatnot, especially in bulk. Their sales were 0. Their business losses were minus $8,000. Their personal income was being written down by $8,000. Their refund was like $3K. The government's like, well, let's take a look. You don't have any income reported, so is this even real? Right? And the answer was, yeah, it is real. It was a husband and wife team, and we split all their income 50-50, right? Their expenses 50-50. The husband got reviewed, sent in everything, had it all. They're like, this looks great, but save it for the following year when you actually have sales. The wife, they didn't even ask. It was identical tax return. She got away with it. He didn't. He just had to wait 1 year for it. And I mean, it's the same. So it's kind of random how they pick you out. It would only offset the cost. So for example, if in year 1, you bought a bike for $500 and you expense the full bike in year 1. If in year 2 the bike gets stolen, nothing to do with tax because you've already expensed it all.
So if I don't have a record of actually purchasing the bike, or let's say I bought 5-6 years ago, then I can't do anything?
Yeah, basically. Yeah, basically. Yeah, if you're bringing in old equipment from previous years, it's not the same.
Shouldn't it still count as a loss though?
What's its value after 5 years?
Like,
Zero.
If I have a police report, could I bring up a comparable sale of the same bike?
A second-hand version of the same bike. Like it wouldn't be the brand new one because it's 5 years old already.
Like let's say I pull up a Kijiji ad.
Yes.
I'd be okay?
Yeah, you could probably get away with that. Being like, here's my police report that tells me the type of bike it is, and here's an ad for the same or similar type of bike, second-hand, about the same age, $200, $500, whatever it is. Cool, that's my loss. You can and you can't. And by that I mean if it has value. Like if I buy a $2,500 MacBook Pro, year 1, and it's all personal, I'm working a regular job. And then year 3, I decide I'm going to get into graphic design, and I'm going to use my computer that I already have. The government allows you to figure out what the fair market value is of that computer now that you're going to be using it for work, and then record that as a depreciable asset. So again, if your bike is probably greater than 5 years old, it's probably not worth anything, or that much. But if it's like 2 years old, you paid $2,000 for it, yeah, you should still have like a $1,500 claim on there.
You just can't replace it for zero. Like the bike may not be worth anything on paper, but if I lose it, I still have to go and buy another bike, and no one's going to say,
Yes.
here, have one for free.
No, but yeah, it has to be its actual value. If you're putting new parts on and your parts aren't that expensive, I would expense the whole thing. You want to expense things. You don't want depreciation. Depreciation is a fraction of your total cost broken out over 4 years, 5 years, whatever it is. So you want as many direct costs as possible. So I would say a new crankshaft, new pedals, new brake wiring, whatever it is, that's just an expense. Because really, if you get new pedals for your bike, you've made it better to you, but that doesn't necessarily increase its value. Like for example, if someone put up walls here and now it's broken up into offices, that could increase this place's value. That would be added to the depreciation of the building itself because they've made it better. Or you do a kitchen reno, right? But if you replace the pedals on a bike, you can't just say, well, this $500 bike is now worth $1,000. It just doesn't happen, right? So just expense it. You want to expense everything you can. I mean, if you don't have receipts for something, but you know how much you paid for it, if it's in cash, again, you can put it down at the risk that will the CRA look into it? And if the answer is not likely, then sure, you know you paid for it.
Unless you buy them at Mountain Equipment Co-op. If you buy them at Mountain Equipment Co-op, you can go to the website, you can contact someone there and say, can you give me a rundown of everything I bought last year, and I can do it.
That's right. Because your membership number.
You need
Yeah.
identity number.
That's right, with with the co-op for sure.
From Mech, either the store or the website, they should give you a rundown of all your purchases for the entire year.
Yeah.
And the bank statement, if it's written like from Mick, I bought something, I can't just...
Again, for tax purposes, that's fine. Like for when you're preparing it, if the government were to look deeper into it, it would be a toss-up. If you got a good agent that understands what MEC does, that sells sporting goods, then sure. But if you got an agent that has no idea what MEC is, and that's possible. I have had agents who have no idea what PayPal is. So, it's a thing. Yeah. They don't know everything, unfortunately. If you go to a bike shop that doesn't have a membership program, then you could look at your credit or debit statements to some degree, but you don't want to rely on that too much. If you're feeling that you're unable to keep your receipts organized, take photos, right? Try and taking photos of them and then throw away the receipt, who cares? Because you at least have a copy of it. Okay, for driving, that's a great question. So if you're driving for Uber Eats or even Uber or Lyft, but just anybody, if you're driving for work as a sole proprietor, you need to track all of your fuel for the year or for the time you're driving, not just work fuel. There's no differentiation between work fuel and personal fuel.
If you have no receipts, then you should.
Yes and no. I mean, you don't want to shortchange yourself that much, so go by bank statements or credit card statements. I mean, if you see a credit card statement that says Shell, Esso, Petro Canada, and they're all about $40 to $70, that's pretty safe to say that was gas. Is the government going to accept that if they were to look deeper into your situation? That's one of the things that I believe that they'll be fine with accepting, because really what else do you buy at these stores for that kind of money? Yeah, you might have a snack on there here and there, but it's not like you go to Walmart and claim a $100 supply expense and you don't have a receipt for it. That literally could be one of a billion items, right? But gas is gas. So if you have it, don't short yourself, but going forward, just every year we try to be a little bit better, a little bit more organized. So just save the receipts, stuff an envelope in your glove box. That's what I do. I just put them in there. That includes parking receipts and everything like that. Just throw them in the one area. Now you have it, right? If you don't want to be super organized.
If you don't have receipts.
If you don't have receipts, it's a risk thing.
Like you can say, look, I spent $100 a week.
Yeah. I mean, I have some clients who don't actually keep very great records, but they still tell me, they're like, I obviously spent money on gas. And if it's in cash, there's absolutely no paper trail. But again, if it is on a credit or debit statement, you can just pull that.
Cash all the time.
If you pay cash all the time, you can put an estimate because obviously you drove your vehicle.
Yeah.
if you were to get reviewed, which is unlikely, especially if you owe money at the end of the year anyway, but if they were to look into your situation, they would say, please provide us the proof of gas. You'd be like, yeah, my car takes this much per tank. A tank gets me 400 kilometers, 500 kilometers. I drove this much. That's how I got my gas. Are they going to accept that? Probably maybe 30% likely that they might, but 70% no. But I mean, that's what they want, though. They do want receipts. That's the only proof they really could get, right? So with automotive, you save all the fuel. You save all your maintenance receipts for the year, and you save your insurance receipts for the year, which would just be the one statement anyway. If you have additional costs like license plate renewal and things like that, you save those. If you have tolls that you happen to drive on for work specifically, you'd save those. And CAA memberships, that includes too. And then we now have a total for fuel, maintenance, insurance, licensing, and other, right? Then on the tax forms, we say, how many kilometers did you drive for the year in your car? 10,000 kilometers, right? How much of that is business? 50%, 40%, 60%, whatever it is. Then the system will do the math to take the proration right out of the totals. Okay, so you need to keep all the totals for the car, and then it gets prorated at the end of the year. Now, it doesn't have to be totals for the year if you're only going to be driving for 6 months and then you quit. It'll be the totals for those 6 months. But it's under the assumption you're working for the full year anyway. So that applies to car for couriers, self-employed people in general. Really doesn't change. When it comes to the proving the kilometer percentage for cars, the government wants a 3 consecutive month log. Starting odometer, ending odometer, why you traveled, right? So they want a work log. 3 months only though, it doesn't have to be the full 12. So because my business is seasonal as an accountant, when I was self-employed years ago, I tracked my big 3 months, March, April, May, or half February, March, April, half May, whatever it is. And I made sure I didn't do anything else but worked, which is normally what I do anyway. So I did 90% vehicle driving in those 3 months. Just because for the rest of the year I only did 10%, doesn't mean I'm still not entitled to claim 90% of my fuel for the whole year, because that's the government's rules.
And you just like log this in like
an application. Yeah, I have an application. Mileage log is what you're kind of looking for in the App Store as a title of an application. Okay. Trip log, mileage log, those will come up, and then they're usually GPS. So you click start, type in your starting odometer for the day, hit start, it'll GPS, give you an address, drive a bunch, press stop, it'll GPS, and it'll actually figure out how much you drove, and it'll tell you your kilometers for the time that you drove. Okay. Right? And then it'll spit out a report at the end of the month or whenever you choose to. Parking tickets. Parking tickets are municipal fines. Municipal fines in the course of doing business is an expensible item. Federal fines, federal fines, so that Highway Traffic Act, things like that, speeding, being late on your taxes and penalties associated with that, those do not count. Municipal parking tickets, as far as I know, are the only ones that will count. That includes like those stupid tickets you get at like ImPark and all those other BS ones. But yeah, because those aren't even municipal, those are actually just run by that own company, right? But they're fines. Yeah, expense your parking tickets. So I mean, that's the rundown of income and expenses. And I mean, it can get creative, not like overly creative, but creative in the sense that maybe headphones is a business expense, right? If you have a speaker on your bike, that could be a business expense, right? I mean, these small items to some degree. At the end of the day, it's not really about the numbers. It's not about how you can prove the numbers. It's not about what you bought. It's about your comfort level. If you know you bought gas, it just happened to all be in cash, or you bought bike parts and happened to all be in cash. If you feel comfortable, if your risk tolerance is pretty good, you put down however much you spent, and you know that you spent $100 on bike parts. Can't prove it, but you know. Some people are like, I can't prove it, I'm not reporting it. And again, that's a comfort thing. So it has nothing to do with the actual numbers.